Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. As always, we are now bringing the VRIC to you with our series of expert online panels. And today we're going to be discussing silver. Gold has reached all-time highs, at least in nominal US dollar terms. So what does that mean for silver? And what are the current supply-demand fundamentals for the metal? For that, I've got two wonderful experts here. It's David Morgan of the Morgan Report and Peter Krauth of Silver Stock Investor and the author of The Great Silver Bull. David, of course, also authored The Silver Manifesto. Gentlemen, it's great to have you both on the show.
Thanks
Thank
for
you,
having
Jesse.
us.
Yeah, well, I could think of no two better people to have on the show to talk silver. But before we dive into that, we have to discuss gold because very exciting times in the gold market, having now reached all-time highs. What are your thoughts on gold's price action, and where do you think we go from here? And Peter, I'll start with you on this one.
Very bullish, needless to say. We've just set all-time highs, even all-time intraday highs from what I know, because I think that the December 4th, that Sunday evening peak was a 21.52, if I remember right. And we're now above that, at least when I checked earlier today. So, I mean, not only closing all-time highs, but intraday all-time highs. So very impressive and very bullish for silver as well. It's been quite the leap in a matter of 4 or 5 days. I wouldn't be surprised to see a little bit of digestion go on, for the next few days, just to kind of rationalize that a little bit. But I do see plenty of strength, and we're seeing this with all kinds of headwinds. And nonetheless, it's extremely resilient, extremely strong. When you have all sorts of arguments why it shouldn't be, and it's just really holding up, and yet the sentiment is terrible. People are not paying attention. Mainstream's not talking about it, and that's the exact kind of setup that you need. The weak hands are, and even a lot of the strong hands have given up. So I think it's a tremendous setup.
Yeah, I think that when talking about the sentiment, Ronnie Stofferly of In Gold We Trust posted, gold's hit all-time highs, and Ronnie has not received any calls from ex-girlfriends, any calls from journalists, and he made this list, and he says, "Looking good, guys." Um, so, David, your thoughts on gold's recent price action? Obviously, people were disappointed last year when it hit all-time highs briefly before falling back down, hovering around the $2,000 to $2,050 level, consolidating for a while. Now it appears to have broken out. What are your thoughts here?
Well, I add on to what Peter said initially. I'll give you some thoughts. One is never sell a quiet market and climbing the wall of worry. So it's everyone's kind of looking at, is it real or is it a fake out again? A couple things. One is that it's all futures driven at this point. In the last 3 or 4 days of trading, there's been 60,000 contracts added to the gold futures market. That's a 15% increase in 3 days. That's a phenomenal increase percentage wise. Secondly, there's really no movement into the gold ETFs. And lastly, I spoke with a large wholesaler and a fund manager yesterday. And the retail side and the wholesale side is basically static. There's no one. So I think everyone's doing as Peter said, or you said, Ronnie saying, so good, so far, so good. Because this is the time when no one believes it. The boy who cried wolf. I've heard that too many times. I don't believe it this time. And then the market does start to move. I don't believe it. I've seen this too many times, and wait on the sidelines, wait on the sidelines. You get enough momentum, then all of a sudden people get FOMO and go, gosh, darn it, I better get in. So hard to say. My call right now is I'm the boy who cried wolf, or I'm on that side. I'm leaning toward a consolidation here, maybe a pullback, and everybody says, aha, see, I told you so. I'm right. There we go. I'm going to wait for gold to get under 2,000 or get to 2,000, and I'll make up a number 50. That's my buy point. And then it just goes sideways for a few days, and then it goes up, 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 up. That could happen. I'm not saying it will happen, but these markets are tricky. I've been in them most of my life, and to predict them is very difficult. But we know that we're making a new high. That's a fact. And because we have that fact, we know what the future holds. The last comment is Citibank came out and they raised their target price from 2150, which we're at, to 2300, which is pretty close to what the Morgan report said. I said we'd be between 2300, possibly 2500 this year, barring, I'm sorry, Jesse, I have to always say it, the black swan. I mean, if something happens in the banking system or a big brokerage house or a non-delivery or one of 10 things that could take place and have a probability of taking place, then you could get into a lock limit up. You could go limit up 3 days in a row and lock the gold market down for a couple of days to let things cool off. Will that happen? Well, first of all, there's a very slight possibility it could. Will it? I doubt it, but you cannot rule it out because the markets really are so precarious right now. Nothing makes sense anywhere across the board other than the precious metals do hedge all of the currencies, the bonds, and the stocks. So if you don't have a metals position, you're really not a true investor or a seasoned investor. There's nothing that works in times of distress more than a precious metals.
Very well said. I do want to shift to silver, a metal nowhere near its all-time highs, been kind of languishing since around 2011, the last time it hit all-time highs. You know, stackers obviously getting impatient. However, David, last time I spoke to you, you mentioned that silver is known to catch up and exceed gold in terms of percentage price increase, in the case of a precious metals bull market. Do you expect that to happen here?
You know, it's interesting. I do. Let me explain a little further because I went back and, the old Ayn Rand, check your premises and like, what am I missing? And I think what I missed was in the last bull market, what I didn't realize until I went back and studied it again was we had first of all, I am a believer in Professor Jastrom's Silver, the Restless Metal. He makes a hard case that nothing does anything close to silver in a high inflationary environment. Of course, now we've got cryptocurrencies that didn't exist when he wrote the book. So, I'm cognizant of that doesn't mean it's going to be this time. The point I'm making is this: back in the 70s, we had very high inflation for quite some time. Silver didn't react. And I've forgotten that. And then it actually went up and started to participate. Then it fell back off. And then it went ballistic. So having that in mind with the last market, they don't repeat, but they rhyme, is maybe we're in that kind of a situation where every one of us silver bulls go, what the heck is going on? And maybe it's a repeat of what happened in 74 to 1980, where silver's faking everyone out. Everyone knows fundamentally it should be going up. It's going sideways or staying in the trading range. We're all about ready to give up like we are right now. And then it just goes and goes and goes. So that's what I wanted to add, Jesse.
And Peter, your thoughts on silver's price action at the moment? Do you concur with most of what David's saying there and anything you'd like to add as well?
I mean, yeah, absolutely. I do concur. David sees all the same things I see, and probably more many times. In any case, silver. I'm looking at a chart right now that looks at the last sort of four bulls, including the 76 to 80 that David mentioned, and in each and every case, silver lags and then outpaces, and it outpaces sometimes dramatically. And one of the best, most recent examples we have is in 2020 when the COVID pandemic hit. Both metals, sold off pretty hard at the beginning, and a lot of people like to point to that, and I like to retort that, when people get margin calls, they'll sell what has liquidity and has value. And that's always the case. So it's not a surprise. Gold and silver take a hit at that point initially. It was the same in 2008, 2009, the great financial crisis. But after selling off, so silver sold off in 2020 from, I'm going to say, roughly about $16 to $12 in March, and then went from $12 to $30 by August. So that was a 140% return from bottom to top, where gold produced about a 40% return. So that's pretty good from gold, but that the outpacing by silver was just tremendous. And I think we're in store for the same kind of behavior. It's probably going to lag, and people should expect that, but that's just a gift. It's a gift to get in, and it gives you more time to accumulate a position and let silver do what it does. You have to use that that languishing. You have to use that volatility to your advantage, and that's where I think that people need to have their heads, and their minds geared when they look at silver.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
And the gold to silver ratio is currently stretched to pretty absurd levels, especially when we consider how much silver is actually extracted from the earth versus gold. Why do you think we are at why is there this massive gap between the reality of the metal that's actually being mined and its valuation when it gets above ground? And do you think we could see that gap close perhaps this year or at some point in the future? And Peter, I'll start with you.
So, I mean, part of it is what we just talked about, the fact that silver languishes, and if silver languishes, so gold's been up for, multiple reasons. We could talk about that. There's some great fundamental reasons. I think the single biggest thing to point to is the fact that central banks have been buying just outsized quantities of gold. And I looked at last year's numbers. They were, I think it's something like 1,037 tons. The year before, I think, was something like 1,082 tons. And if you look at the entire supply of gold every year, we're about 4,700 tons. If I have that right, and the math is easy, that's more than 1 out of every 5 ounces in the last 2 years of gold ounces were bought by central banks. More than 1 out of every 5 ounces. So that's tremendous buying power and support. And, I think that explains why gold has held up so strongly in the face of these headwinds. So back to the gold-silver ratio. Obviously, gold's been strong, and silver hasn't kept pace, explaining the high ratio. And I think what we need to talk about is what's kind of capping the silver price. And I think what's happening is that we've had 3-4 years of consecutive structural deficits in the silver market. So, the big consumers are getting their silver somewhere, right? Because if there's a deficit, but, everyone's still getting their silver. But if you look at the 3 major exchanges, the Shanghai, the LBMA, and the COMEX, they've all seen their inventories drop. Now, overall silver inventories, from what I've been able to gather, digging up charts, are down about 30 to 40%. These are hundreds of millions of ounces. And we're not even talking about registered silver. So David probably knows this better than I do. He probably follows that part of the market more. But from my understanding, it's the registered silver that is actually available for delivery. So long story short, to make it simple, I think these large consumers, mostly industrial consumers, are going to the futures market, buying long contracts, waiting, taking delivery, standing for delivery when they mature. They could be buying silver ETFs, cashing in those units, and standing for delivery of those bars. And so that's feeding that demand. While there's a structural deficit, there are these secondary supplies in ETFs and at the futures markets that is feeding that requirement, that supply requirement, and kind of offsetting the structural deficit. When that runs out, I mean, it's hard to guess. It's hard to see really how many ounces are still left. There's always probably supplies beyond that even. But when that runs out, someone's going to stand for delivery, and they're going to tell them, sorry, we've just changed the rules. We don't have the silver available for you. We're going to have to pay you out in cash. And that's when the proverbial, what hits the fan. And I think the sparks are going to start flying. I'm curious what David thinks.
Yeah, David, love to get your thoughts. And maybe if you could start by giving us a bit of an introduction on the silver gold ratio, where it stands today, historically where it's been previously, and also what the ratio, as far as you understand, is of the amount of silver to gold actually being extracted at present time.
All right. Well, let me compliment Peter. I think he did a great job. So now I'll give you more of the philosophical side. The reason the ratio stands so high is because silver isn't money. If silver was money, the banks used it as a store of value, and they bought 1/16th as much silver, the classic, or what's called the monetary ratio. There'd be a whole different price dynamic. But let's look at you asked the question, Jesse. So if you look at a chart of silver on the gold silver ratio, and you go back thousands of years, you find that the gold silver ratio never got above 20 or 3,400 years, 3,000 to 4,000 years. It's only been since about 1900 that it's got above 100 to 1 a few times. And the reason is that when you go back into the history, silver and gold had one purpose and one purpose only: money. That's all they were. It wasn't until the 19th century with the Industrial Revolution where silver started to be utilized in technological development, electricity, and everything else. So you've had a demonetization of silver in 1873 by the bankers that wanted a gold only standard. And let me digress for a second. Anyone that really wants to understand money in the markets, look up an article called Gold Standard Equals Fiat in Disguise. It makes a great argument for why a gold only standard is the bankers' way to go to a fiat only standard. We need a dual or bimetallic standard. Coming back to the point, so silver really traded at the natural ratio back in the early centuries of 12 to 1. The 16 to 1 bothers me because so many people say, well, that's the natural ratio. It's never been that high. The highest it's ever been is 13 to 1, and now it's 7 to 1 in the earth. But the 15 or 16 to 1 is the monetary ratio. So I thought when I started the Morgan report that 80 to 1 was as high as it would ever be. You know, that's back in 2000. So. And of course, it's been as high as 125 to 1 or thereabouts. And I believe the COVID debacle in March of 2020. And I had admitted, you know, that I was wrong. I'll admit when I'm wrong. Believe me, I've done it several times publicly. And I thought, okay, I'll get above 100. I never dreamt to get to 125. Didn't stay there for long. Silver has a propensity to spike high and spike low. Regardless, the biggest problem with silver is it's not considered a monetary asset by the institutions. But there are some that are smart enough to know that. And when they do know that, we get these big moves in silver. Let me explain. In 2020, the amount of institutional investment in the silver market was 320 million ounces and about 200 million ounces in the retail side of the silver. So you had more investment demand in 2020 than you had industrial demand. Huge amount. Basically, that's the whole silver market. So where's the deficit? Well, because you had to have silverware and you had to have silver jewelry, which offtake of silverware isn't much, but jewelry is fairly significant. Point being is that was a huge year. You haven't had a year like that since. Here's my conspiracy. I'll put on the tinfoil hat. I'll admit it to everybody. The question is, why isn't silver being used as at least a trading vehicle by the algorithms? I mean, these banks all see it. Is the word out? Hey, you know, we're getting off takes through the industrial side that are so strong. Don't you dare buy physical for any kind of investment purposes. Play the futures market all you want, but don't you dare dip into the pool because we need to mitigate this as best we can until we run out. And as Peter said, and it could happen, I think it will happen, that day comes where I say, oh, I need my silver for, you know, my Teslas, or I need my silver for my Mitsubishi conglomerate or whatever it is, and they get delayed. And that's when all things, you got to look at these companies. They're not stupid. So why do they hold, you know, prime positions in the SLV? So they could take delivery. Why are we having an outflow of silver out of the SLV when we have a bull market? Why are we seeing the drainage of the silver market from silver squeeze of 150 million ounces in the registered category go down to 35 million ounces and stay there as long as I've ever seen it? It's bounced back up to 50 million, I admit it, but a drainage also in Singapore, as Peter said, and also the LBMA. So that silver's got to come from somewhere. And unfortunately for the silver shorts, they can't send them a piece of paper with the word silver on it and put it into an EV. And that's where you probably hate the fact. Now, you also look at the philosophical side, I go one more step and give it back to you, Jesse, and that's, who else has a cartel on the I'll call it the negative side. The Silver Users Association, often referred to as the Silver Abusers Association, had one mission, and that was to make sure that silver was kept low in price for industrial use only. And the subset of that, and this again is my thinking, was that let's just make sure that everybody's psychology is that silver is not money, that silver is an industrial commodity only. And in that way, we have a lot better chance of making sure that there isn't much investment interest in silver. And so there's also the distraction of the cryptocurrencies and the other places to put your money to hedge inflation. And the last thing I said I'd stop, I won't, is the crypto market. If you look at the psychology of the crypto market as being a way to mitigate what normally would go in the silver market, you got a lot of money that could have moved the silver market that's gone into another market that's a software program. Show me any crypto's name, choose your favorite one or two, and show me where they are on the periodic chart. I'd like to see it.
Very well said. And I would like to now shift to just the supply demand fundamentals as you both see them currently. Would love to hear your thoughts on current inventory levels on the metals exchanges, the potential increased demand coming from the industrial side. If you want to dive into the paper manipulation and how that plays a role, would also love to hear your thoughts here. So just anything information you can provide regarding the current supply demand setup as you see it. And Peter, I'll start with you.
Thanks, Jesse. There's one thing I want to kind of just add to, I guess maybe sort of tack on to what David was saying, and that is, I was at PDAC just a few days ago and Investor Forum, and there I spoke to someone who runs a large silver producer, not in North America, and they sell their product out to China and to the West. And he told me, he said, our sales to China, or our sales period, are so tight, the buyers are coming to us and are saying, can we have it? Can we have the product? They're willing to pay a couple of weeks in advance of delivery, and they are willing to, in China, they're willing to pay $3 over spot to get the silver. So the markets are very tight, and it doesn't matter. I think maybe what we see on the surface, this is someone who deals with it day to day and knows exactly where it's going and just how badly the consumers want it. So that was the first thing that I wanted to say. If we talk about the supply demand dynamics, I find it really interesting. I actually in my presentation I put together a chart. Sorry, not a chart, but a slide where I talked about the realities of the 2023 silver market. So here are a few points. The supply forecast was that supply was going to be up 2%. It was revised eventually down 2%. So it was 2% less than the year prior, when they thought it was going to be 2% up from the year prior. Industrial demand was forecast to grow by 4%. It grew by 8%. Solar demand was forecast to be 140 million ounces last year. It was actually revised up to 190 million ounces. The supply deficit was forecast to be at 142 million ounces. It was revised to 194 million ounces. I mean, I don't know what else to say. The markets are really tight. These deficits are bigger than are being forecast. Supply is turning out to be less than forecast. There was an interesting bit of research from Bank of America just a few months back that surveyed the 13 largest primary silver miners and asked them where they thought silver supply was going to be, mine supply, in the next few years. And across the board, they said flat, nowhere better than right now, nowhere near the peak of 2016, which was 900 million ounces. We're right around 800 million ounces right now. And they think that this year, next year, the next couple of years, we won't do any better. And this is where, when silver demand is going through the roof, the 800-pound gorilla, as I like to call it, in the silver market is solar demand. Here's another example. Overall industrial demand was something like 632 million ounces for 2023, and solar grew from about 24% of all of industrial demand to 30% of all of industrial demand. And we are at something like almost 20% of the entire silver market goes exclusively to solar right now. So that's bullish enough as it is. Then if you dig a little deeper and look under the hood, Silver Institute is expecting that in 2024, 50% of solar is going to go to this more silver intensive technology called PERC. If you look at 2020, the two newer technologies being PERC and TOPCon. I back up for a sec. I have to correct that. They think that TOPCon is going to be 50% of the market in 2024. TOPCon takes almost 50% more silver per panel. In 2020, TOPCon and HJT, which HJT taking up to 150% more silver per panel, made up just 10% of the manufacturing capacity in the solar for solar panels. Last year, 2023, together, they already made up 35%. This is according to Rystad Energy. And now the Silver Institute thinks that TOPCon, just that one newer technology that takes 50% more silver, will represent 50% of the whole solar manufacturing industry. So, even if let's say we're a little bit conservative, and we say there will not be any growth in solar panel manufacturing in 2024. By virtue of the fact that we're shifting to these higher technologies that require more silver, we should still get more silver being required by the solar industry. So, and we haven't looked at electronics, we haven't looked at EVs, we haven't looked at medicine, we haven't looked at water filtration, all the other applications. I actually think that, and again, forecasts are that there's going to be sort of weak-ish growth last year. Demand for physical, in terms of investment, in terms of jewelry, and in terms of silverware. I mean, I could see silverware maybe not being that strong. People are being more cautious in terms of how they're spending. I think there is going to actually be considerable growth in jewelry, and considerable, I think, especially like David was saying, if there's some kind of a black swan, we're going to see huge demand come in from the investment side. People are going to look at gold at, even right now, 2150. Gold goes at 2300, 2500. They're going to look at an ounce of gold at 2500 and they're going to say, maybe I need some gold now. And then they're going to say $2,500 for 1 ounce of gold. Geez, what else can I buy? Well, if silver is even at $30 at that point, that's going to look a whole lot cheaper. $35, maybe even $40. It's going to look a whole lot cheaper than gold looks. It's going to be a natural alternative. And so I think that investment demand for this year even is being underestimated. And I think these are going to be what's going to probably exacerbate the deficit this year and push it to numbers that are even bigger again, that are being forecast.
Excellent summary. And David, anything you can add to the supply demand fundamentals, and any thoughts you have about what Peter just touched on?
Yeah, again, my compliments. You did a great job. I'm going to answer your question on a different way. One is, about the paper situation in silver and gold, and what that means. Because something about silver is, to quote Ted Butler, you get too much for your money. I mean, it's so undervalued. But in that case, because of that joke, but it's true, a lot of people of means can't, get that boatload in their basement, so they store it. The problem is that this is more pervasive than people realize. This is from years ago. You don't have to see the title, but Class action suit accuses UBS of charging storage fees on phantom silver. And it goes through and talks about that. And according to the lawsuit, customers were charged storage fees every month, even though the bank was not actually storing anything. It never purchased any physical silver. It said the bank allegedly used customer cash for its own purposes. In effect, customers ended up by buying a non-interest bearing silver bond. Such bonds based on a promise of repayment in precious metals were typically issued in the late 19th century. So then it goes on and talks about a similar case against Morgan Stanley. And what it said is it was filed in 2007. And in that case, this is a second one, small investors were also claiming they'd been defrauded into participating in unallocated metal storage. The bank defended itself by alleging, listen to this carefully, among other defenses, that it was simply following standard industry practices. In other words, the amount of information given to customers, the unallocated nature of the scheme, as well as the charging of quote unquote storage fees for imaginary metal, were standard industry practices. In light of what we now know, maybe they're telling the truth. Morgan Stanley did eventually settle for a multi-million-dollar payout, but it continued to deny liability. Now let's talk about that for a couple of minutes. First of all, what happened? Well, they lied, they frauded people. People were getting a statement from a very large bank, which you would normally trust, UBS being one, Morgan Stanley being the other. And the silver wasn't even there. So what happens? They get fined. So they pay in fiat. Well, is that fair? Just think about for a minute if they had to pay in silver and had to go in the open market and make everybody whole. That would put a physical demand on the physical silver price, and I suspect it'd raise the price. The other thing is how pervasive is it? Is it, as Morgan Stanley alleged, that it's standard industry practices? So John Adams from Australia and myself, and John was the lead on this, but we made a campaign for about 3 months or so about allocated versus unallocated. And there really was a movement at the time within the silver community, people moving unallocated into allocated, and that moved the price for a while. The other thing is how much of this goes on. The answer from investigations that are currently ongoing and my knowledge of the industry, it's more often than you might think. So when you look at the investment side of silver, where maybe we're draining the stockpile to meet the physical demand by industry, is there as much there as there is on paper? I suggest highly that there is not. The other part is what I talked about earlier about why isn't there any investment demand through the institutional side? Is it because someone whispered in somebody there? I mean, that does sound like a conspiracy, and I fully admit that. But let's say that is the case as a thought experiment. There's going to be others out there in sovereign wealth funds, family offices, a rogue nation state. Somebody that's gotten burned by the New York and London, the Anglo-American banking empire, said enough is enough. I'm buying silver for investment purposes. What if somebody puts it back into circulation as a monetary asset, like's being done with a couple of the cryptocurrencies I can name? So there's a lot in silver's favor. It just looks so bad right now, price-wise. But as Peter's done a great job, and I've tried to, put forward, there is so many things about this market that if you are an ultra conservative, remember, conservative conserves. Conservative is someone that cares about the environment. They only cut down the amount of trees that you need. They only dig as much minerals out of the earth that you need. They conserve. So anyway, an ultra conservative would say, well, if the best miners in the world that mine silver can only get out of the ground for roughly $25 an ounce, and I can buy it for that with the premium or close to it, I'm becoming one of the best silver miners in the world, and I don't have the hassle of negotiating with the EPA and doing a study and doing a preliminary economic assessment and getting a bank loan and all the stuff that goes into mining. All I got to do is put it into into my house or my office, or find a storage facility that's legit, and I'll become one of the best silver miners in the world. Anytime you can buy a commodity under the cost of production and have some patience, You basically can't lose. Now, I can't guarantee that, but that's always been the case in the past. So I know I sound like a broken record. I know it sounds too good to be true. I know people are burnt out. And again, those are the places where markets really usually start. And everybody that's on board, some get off board, just say, oh, it's not real this time. And then it just goes. That's what happened in 2011. I mean, things just started to go and go and go. And people go, oh, it can't go any higher. It does. And that happened in 1980 as well. The problem I see if that occurs again, and it probably will, is what do I do? What does Peter do? I won't speak for Peter, but in my own case, do I really want to sell this precious metal for fiat? Maybe. I'll have to say maybe. I'll leave it there.
Yeah, that is actually a good question. Because as we have seen the last few times that silver did go to all-time highs, it came back down the other side as well. Could we see sustained higher prices, I think is the real $1 million question. I'd like to get
Let
your
me
thoughts
jump
on,
in on that
yeah,
real quickly, Jesse, because
please.
very few people know this. So when silver in 1979 hit $6, that was an all-time high. A year later, it hit $50, went up 850% in 1 year. That was an intraday, 1 day high. We all talk about $50 silver, but we don't really elucidate that it was a 1 day deal. However, when it came back down and settled, the year-long average price for silver in 1980 was $20 an ounce. Think about that. The all-time high in 79 was 6. The average price for a year was 300% higher than the all-time high a year later. And I want to put that out in the consciousness of everybody, because what you just said, Jesse, well, will it, stay at a high price? Well, it didn't stay at 50, but it stayed at over 300% higher for the year. So that's something to bear in mind. Could that happen again? I would absolutely suggest it will. So does it go to 150 and then settles at 50 and stays there? I don't know. I mean, it's so undervalued. Anyway, I won't carry on further, but that's a point that not very many people make.
Yeah, great point. I'd like to get both of your thoughts on the silver mining sector at present. Do you think it presents a value proposition? Do you think we could see a bigger crash or a big correction in the broad market that could bring the silver mining stocks down with it? And in that case, do you think it's better to be on the sidelines there? Interested to hear your thoughts. And Peter, I'll start with you.
So, I mean, it's already crazy cheap.
Yeah.
It's already been so blown out. I'm never going to say never. I'm never going to say it's impossible. And if you do get, some sort of a dramatic sell-off in the broader markets, I would expect it's going to bleed into silver miners and silver juniors. But the downside just seems so limited already. The sentiment is just so bad already that I have a hard time seeing much downside at this point. It's absolutely a buyer's market. It most definitely is. I did want to add something that kind of reflects and mirrors what David was saying about buying things that are below the cost of production. I've been saying lately that silver is the new oil, and if you look at the use of silver in solar panels, and that the International Energy Agency expects that power from solar will be the largest source of electricity globally within 2 or 3 years, surpassing coal and surpassing natural gas. So that's going into a lot of silver. That's why I'm calling it the new oil. But I'm also saying that silver is the next uranium. Look at what happened with uranium. How long this uranium price went sideways, sold for way under production cost for years, probably half or less than production cost, and then exploded higher and doubled in the last 6 months. I think that's a great analogy for what silver can and probably will do. And to David's point about how silver, is what's going to happen if it rises dramatically, and what can happen on the backside of that. Well, yes, historically, absolutely, we've seen these run-ups, these spikes, and then it's come back down. To David's point, excellent point, it averaged $30 in 1980. I actually believe very much that we could have the same sort of thing play out, could go to some crazy price in a media phase. But given the growing industrial demand for silver, I cannot see it coming back down. If it went to something like $100 or $150, to see it coming back down to $30. Just cannot see that given the burgeoning and growing demand for this metal. So it's a gift, really. It's a gift. It's a generational opportunity at this point, and people need to exercise patience. It's a patience trade, really, is what it comes down to.
Absolutely. And David, your thoughts on the silver miners at present?
Yeah, I'll just pair what Peter said. I mean, we're telling everyone that's a premium member or paid service to keep what they have because it can't go much lower. Keep your at least your position and then build cash on the side. If we get a blowback because of a market crash, could they get cheaper? Yeah, they could. And that's the time to deploy the cash into. I still want to start with the top tier and the mid tiers, unless we have. There are some speculations that are, hate to say sure things that are better than others because they know more about them, and therefore you might pick up start to wade in there as well. But I think it's stupid to not be in it to win it at this point because how much lower is low, and you might see them. And this is very rare, but you could see a massive sell-off in the general market, and gold and silver kind of just stay there. They're statically stay, pretty much into the trading bottom of the trading range, let's say, instead of making another low. That could happen because they're so cheap right now. I mean, the one place that's unloved is value investing. And the only value across the board really is in the resource sector and primarily in the precious metals. And you're only seeing like Druckenmiller and a couple other funds that are coming to the front buying quietly, because if you've got a lot of money into a small market, you can move it pretty quickly. So you have to deploy your cash over time and do what's called accumulation. So you can only buy so much over time, and you really buy within a range. You're not too worried about the price, basically, Jesse. You're worried about the price, but you don't want to move it. So in other words, we'll buy between $2 and $3.50 for this particular company, as an example. And then it gets above 3.50, you just wait. And if it comes back down in that range, you buy more, and you continue to buy. And once you've accumulated your position, then other market forces will drive it higher eventually, and on and on. So I'll leave it at that.
Well, gentlemen, it's been a fantastic conversation. I learned a ton, as always, when speaking with both of you. Before I do let you go, David, tell us about the Morgan Report and where people can find that.
Yeah, just go to themorganreport.com and get on our free list. If you're interested in subscription or anything else, just go ahead and hit the tabs. Look at the blog. That's free. I do a lot of education for free. And then I'm doing a new project, a documentary called Silver Sunrise. That's at silversunrise.tv. It's all about the big picture, even though silver is in the title. It has to do with the stress of money, really. People don't understand what money is. They don't understand the difference between currency and money. They don't understand how it's all manipulated, how the whole thing is based on a fraud that you can get something for nothing. And the Anglo-American Empire basically has created a world banking system that basically preys on the entirety of the population, and that they have the control mechanism, meaning money is power, and they bought really almost all the political class across the board. Doesn't matter, as Mayor Rothschild said, give me the power to create money and I care not who makes laws, which means I don't care if you're communist, fascist, socialist, democratic, republic, or the voluntarism. Doesn't matter. As long as I control the currency, I can manipulate the political structure in any direction I want. And that's a very, very sad state of affairs. My life purpose to correct that. I would correct that with honesty. And the only thing that can get there from here to there is an honest money system. And that may only be a transition. There may be something better than I can think of. And I wrote about that in the last chapter of the Silver Manifesto, because I'm pretty open-minded and I certainly don't know it all. But I certainly have a lot of questions about why we're in the predicament we are. I think I figured that part out and what the solution is. I'm open to it. But I think we've got to get back to one-on-one. People have the power of money and not the banking institutions.
Absolutely. I'll put a link to the Morgan Report and Silver Sunrise in the description. Peter, tell us about Silver Stock Investor, what it is you do there, and where people can find it.
Yeah, so thanks. Silver Stock Investor, as far as I know, is the only newsletter that focuses exclusively on silver investing and silver investments. I cover the space from physical and ETFs to all the way to juniors. And so that's sort of a great way to follow silver and silver investments in real time, silverstockinvestor.com. And then a couple of years ago, I published a book, The Great Silver Bull, which really is an introduction to silver. And I go through the history of silver, through some macroeconomics to talk about, for people to understand really where we are today, economically, financially, etc., even socially in some ways, and what silver's role is in there and what it has been. And I talk about the supply demand fundamentals, ultimately how to build a silver portfolio and how and when to sell, because that's what we're here for. You know, these dramatic gains that lie ahead, we want to take advantage of them. And that really is the goal. So the Great Silver Bull is available. You can go to Amazon and you'll find that there. And I really thank you for the opportunity, Jesse.
Great. Well, I'll put a link to Silver Stock Investor as well as the Great Silver Bull also in the description below. Thank you so much, gentlemen, for coming on. It's been a blast.